Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 24th of September. I'm Daniel Lam, your host for the podcast. There's been much interest on the bond space since the FOMC last week. Well, we believe US government bond yields are set to rise in the near term. Market expectations for Fed rate cuts approximately align with the Fed's for this year, but through 2026, the market is expecting more cuts than the median Fed dot plot projection. So this means a risk of a rebound in yields in the short term as market expectations adjust. Our stance since the FOMC meeting was to take profit on long maturity bond exposure and rebalance towards our preferred 5 to 7 year maturity profile. We are anticipating a rebound in the US 10-year bond yield towards resistance in the 4.2% to 4.3% range, while US 30-year government bond yield would go towards the 4.8% to 4.9% range. These would become attractive levels to reconsider adding. The talk by the Fed's new governor, Stephen Miran, that the Fed can be more aggressive in cutting rates triggered much discussion in the markets. It certainly challenges the relatively cautious Fed dot plot. The potentially growing voices from the Dows in the Fed supports the views to buy US government bonds if yields do rebound from here. Now for credit, i.e. US dollar corporate bonds, we believe they are likely to perform broadly in line with government bonds. So the Fed's decision to deliver this risk management cut supports our view of a soft landing scenario for the US economy, which is positive for corporate bonds. This is why we expect corporate bond yield premiums, i.e. the spreads, to remain well anchored around these tight levels despite a healthy primary issuance supply pipeline. Cash yields, however, are more directly impacted by Fed rate cuts. So therefore, we would be continuing to look for opportunities to lock in bond yields for longer, especially as a short-term rebound in bond yields create opportunities. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.